Good day, all. Ira Epstein of Linn Associates with your financial market update for this Wednesday, the 13th of March, 2019, just after 3:30 p.m. Central Standard Time. Crazy day today. As it turns out, the FAA, with prodding from President Trump, has ended up grounding the Boeing fleet of 777 MAX 8s. Make a long story short, the market and the Dow fell down as obviously Boeing got hurt on that initial announcement, but look at how it's come back. And you're looking at late day quotes. This is about where the market's finished. I think we're at 4-month highs in a lot of the stock indices. The dollar is making new lows as I'm talking to you. And remember, that's down a full cent from where it was just a few days ago. And take a look at what's going on in foreign currencies. They're moving up against the dollar. So the markets seem to feel something is brewing. If you take a look at what's going on in the energies, 4 cents higher in gasoline today. I hope you went to our website and you took a look at the report that I put out just yesterday on gasoline. If you haven't, go to www.iraepstein.com under the word education, and you'll see the special video report. Click it, and away you go there. Also, while I'm at this, remember we have our webinar tomorrow. That's at 12:30 p.m. Central Standard Time. The invites have been sent. If you didn't get one, call my staff. As you can see in the grain market, wheat was up dramatically yesterday, fell back pretty hard intraday today, finishing down on the day 5 3/4. So let's look at these S&Ps. The market a new high for this move. Very, very fascinating. What traders won't want to see is getting under the previous break low right here of last week's low of 27.47 on a closing basis. Until that occurs, this market just keeps defying logic. Now, when I say logic, trade logic, because you're into a resistance area. You're right up at the zone where you have failed in the past. You see this right through here as I'm pointing? I got my directions wrong there. But right through here, you're in this resistance area. Is the market going to get more bullish, or is the market going to feel that it's accomplished enough? That's the logic that I don't know. When I take a look at what's going on, look at this break that you had, this deep break 4 days ago at 27.22, and here you are at 28.15. So you have come roaring back 100 points in this market. The last rally high was 28.1975. You hit it today. You got up as high intraday as 21.21 1/4. So the market's right back into that zone. Where did the market grab traction? Well, I cannot say it's any moving average because the 200-day didn't stop the market. Once it got back over the 18, it seems to have kept up with itself. But what grabbed the traction was the Bollinger Band. As you take a look here, the market came down. This date is March 7th. Seems like forever ago, 6 days ago. Hit the lower band, found its support, went back to what I call that line in the sand, the 18-day average of closes. Now the market's getting more bullish, but I don't have reason to believe it's going to break out to the upside because it didn't break out to the downside. We're caught in these Bollinger Bands, and I think over the next 2 days we'll maybe get an answer as to which way this market wants to break out, if it's going to break out. That becomes the first thing. You are overbought into a resistance zone, and I'll say it again. I think the pros were taking money off the table at this upper Bollinger Band. And I realize when the market hits a Bollinger Band, people get more bullish. When it hits the bottom, they're getting more bearish, but that's the function of that algorithm. When we take a look at the NASDAQ, little different story. We have been riding the upper Bollinger Band for 2 days. That's very different than hitting it the first time. Admittedly, this market is overbought, and it's continuing overbought, and this is the first real close over that upper Bollinger Band. Can it break out from there, or is it going to fall back? Let's assume that the market falls back, just for the sake of discussion. Well, you've got two numbers that are coming in as support, 71.15, the 18-day average, and 71.18, the 200-day average of closes. That will be, in my opinion, if the market falls down, the first support zone. If the market breaks out of here, we'll look back and say the sideways action was what the market needed, and up and away it goes again, led by what used to lead the market, the FANG stocks. Let's see if that holds true. The Dow is the laggard, but we have to understand Boeing's in this. So if Boeing weren't in it, where would it be is one of the questions. It changed its nature today. You've got higher lows. Now the question is, did you make a higher high? If you look at today's high at 25,775, it cleared that high. As I said, if the market cleared that high, would the resistance come in at the 18-day average? That's what we're about to find out. In the Russell, you rallied up, and remember what we talk about so often here, this red line? That is that 18-day average of closes. I believe, and what I teach in my charting course, is that's a neutral number. Often if a market gets to an extreme, and it was getting up here to the 200-day average in the upper Bollinger Band, if it slips back, one of the spots that it tries to grab traction at might be that number. And as you can see, we came into that. We then went to the lower Bollinger Band. Remember where you're at now. You're at upper Bollinger Bands in some of the indices. You grabbed some traction, and where did you go and stop today? Again, at that 18-day average of closes. If you close over that number, until you take out today's low, you would turn the trend back up. Today's low, because it's an outside day up, is an important number. If it's taken out, it's another trap signal for this rally, and then I would have as a goal the potential, well, you know, I wish I could say it would go there, 1525, because that would be a bull trap. It hasn't done it. Who's in control? Well, on the close, nobody. The swing line's up, but the bias is down because you closed underneath that 18-day average. Bias is set by, in my opinion, where you close in relation to that 18-day average. On the VIX, I am expecting, doesn't mean I'm right, that when the market, if it could get down to the lower Bollinger Band, 1299 is the number right now, it'll change when you reopen, that there'll be put writers down there looking for the market to rally from there back to the 18-day average of closes. If you'll notice, that's been pretty much one of the things that I've been talking about. Does that work all the time? Absolutely not. Writing an option obviously is similar to a futures market, except one difference. Sometimes the options get thinner than the futures markets do. Right here you can see the first challenge certainly did not work, but if you come down, you see more times than not, it's pretty much a game plan. Doesn't mean you don't have stops, you don't worry about it. No, that's not what I'm saying. It's just I look for what I think is more of the logical things that are going on. In the T-bond market, you are overbought in an uptrend, higher lows, higher highs. I will again restate what I stated yesterday. As long as the low of an outside day up is not taken out within 2 trade sessions, I don't see a trap developing from it. That doesn't mean you can't take it out, but if it took it out tomorrow, then I'd have this number as a setup. Without that, it's just what I'd call noise if the market's going up and down. Who's in control of the market? The bulls right now. Higher lows, higher highs, but you are overbought. And the question is, does it have the power to get up to the Bollinger Band, or is it going to fall back to that 18-day average to grab traction? In the 10-year notes, you've gone from lower bands to upper bands, challenging back to the area of the 18-day average, and now you had an inside trading day. Again, you're overbought in this market. TLT's not telling us much more of a story either. It too's overbought in an uptrend, bias up as well, support back at 121.01. If you took out 120.98, you'd break the uptrend. You wouldn't put the market in a downtrend. In the dollar index, what did I start this off by saying? You were just at 97.66.5 in the dollar. And when it got up there, and this is one of the things that you have to learn with the with Bollinger Bands, the first attempt at it is important, but it's how it reacts the day after to break out. And it didn't hang in there. Then you're taking a look, okay, is that a one-day fluke and then it's going to move? If not, be careful, because that's telling you the power was spent, especially if you have an overbought reading. Where could the market go back to? Well, I look for the 18-day average, as you know, is that neutral number. So here's the market setting off. It's not a trend. It's backing off. And today the market backs off enough to get under it, and now it's absolutely what I'll call without trend. Higher high, lower low. The momentum is turning down. That seems to be leading price. And if you take a look at this, you saw that it was trying to do that yesterday. It's still doing it. Now the bias is down. You are not trending. You seem to be moving in these big swaths of a vertical price move. And with that, the eurocurrency is going. They're almost mirrors of each other. But what did the euro do? As the dollar was trying to break out to the upside, to the downside, the euro, it came right back, and then the day after closed up. That's often a sign, watch out, you could be in a problem. Now, if it keeps going, I'll look for the 18-day average of closes. This was March 12th, yesterday. This is today, and notice where the market pretty much stopped. Now the question is, what do we have? And I can only see a higher high, lower low. I don't know. In the British pound, what stopped the rally today? The upper Bollinger Band. What stopped it back here? The Bollinger Band. Are you trending? No, you got a higher high and lower low. I don't know if you watched today. I've been watching Parliament since the votes began, and they are trying to get an extended, almost unlimited extension from the EU of Brexit. Why would the EU give them that is the first question in my mind, and you got to get 27 countries to do it. On the other hand, it also means that there's not going to be a hard Brexit. They don't want to just leave the EU, and I think the market looked at that as a relief rally, almost a 2% rally today. As markets don't know what they're doing in currencies, and I think currencies are often the best trending of all vehicles because it's one of the biggest markets in the world, is you take a look, you're pretty neutral here. You've got an outside day up into the 18-day average where it faltered again. If you take out today's low, either on Thursday or Friday, I will be surprised if prices don't make an attempt at lower prices, maybe even the lower Bollinger Band. What is the trend? Well, right now, it's questionable. While the swing line's up, prices closed under the 18-day average, and the resistance comes in at two levels. Right here, the 18, back to the 100, pretty much where it failed on the last rally. We're about to find out. Bitcoin. Bitcoin is just hugging this 18-day average. It can't get itself going up or down just yet. Momentum's not giving us any indication either. When we come to the differences between Brent and WTI crude, well, you didn't stay very long over that 18-day moving average of closes, which means the premium difference is coming in. You got up in the Brent to the upper Bollinger Band. You know what I'm going to say. The first challenge is often an area the pros take some money off the table. You are overbought into that resistance, and like so many markets right now, not trending, lower low, higher high. In the Brent, it's an attempt at a breakout. You know what I'm going to say again. The first attempt is often telling. Will the market be able to continue, or is that where the market fails again? The other thing I'm watching, look at how narrow this band has become. This market's getting ready for a move. It may be in it. It is typical if you get a breakout to the upside that you get overbought in narrow bands, and then you have to continue. If you start backing off like we saw in some of the other markets, be cautious here because you could be back at that 18-day average before you know what's going on. The good news is that you had a bullish crossover when the 18-day average right here got over the 100, and that carried into a resistance point. In gasoline, this market's trying to break out to the upside. It's got the embedded reading. That is the strength where the market is lying. Whenever I see an embedded reading, which means the two numbers that make up the slow stochastic, it's a momentum oscillator, start going and lock in sideways over 80, that is the strength I look for to carry the market. Now the question is, just like before, can you stay over that upper Bollinger Band? You've hit it twice, and today you tried to get over it. Very important day tomorrow. Look at the difference in stochastics and crude. You can see here, those are overbought. This is embedded. And the natural gas has no trend as I see it. This is the May contract now. Higher high, lower low, whipping around the 18-day average. Like so many other markets, just not a trend. This morning when I was putting out my subscriber video, and that is the video that I really wish you would see. The reason I say that, I kept telling people, I'm not seeing clear-cut trends in this market. It's difficult right now to get a footing as to where this market wants to head. And that doesn't mean that stocks aren't going higher. That's not what I'm getting at. Look at the resistance points we just went through. So each morning what I do is I invite you to have a cup of coffee. I'm going to review 40 charts, and they're going to look like this. I'm not in it. I talk over the charts. I'm going to cover all these different areas. I'm going to throw out what I think the pros are doing or not doing, what the chart action looks like. If there's any technical and fundamental information you should know, I'll throw it right out there, and I will throw out trade ideas. I typically try to keep these, probably 10, 15 minutes, no more than that. And the beauty is you just can scroll on the bottom. There'll be a drag bar. Go to the area you want or watch them all. But it's a game plan. And the reason it's a game plan, it's not my plan. It's your game plan. Maybe you're thinking of, I want to be long, I want to be short. I wonder what another technician sees out of it. That's what I mean by game plan. I'm offering what I see. Maybe it pushes you where you want to be. Maybe it takes you back from a brink. Don't know, but my goal is to provide you with something interesting. To get this, all you need to do is go to our website at www.iraepstein.com. Under Education or Research, go there. Sorry for being so long, but there's so much to cover today. Have a good day.